I'll take the first thumbs up if you don't mind, please. I got a couple of folks still making their way into the group here. Some cool stuff going on pre-funk here in the discussion. Welcome to everybody at the Independent Investor channel. Talk about the week's action. I'm going to be going for just an hour this evening. This will be the last live stream in probably the next couple months. I'm going to be taking a little bit of a leave. I've got some stuff that I need to take care of that's going to consume a lot of my time over the next couple months. So I'm going to actually hit the pause button a little bit. No problem. Going to continue to monitor the stock market. No real stock moves to talk about other than getting the M1 finance account stood up this week. I'll let you guys know where I'm at with that. Basically, to give you a little bit of a hint, I built basically just a spider portfolio. I can certainly give those percentages to you guys, but that's built out of all 11 sectors, $1,500 portfolio. So definitely passive in nature. So if you guys can give me a thumbs up, let me know. I see one of the thumbs up here. I'm not really sure if it's for my audio. But I've got a couple of channel creators. I definitely want to thank Brent for making his way in here and offering his time to the discussion. Keep in mind, this is really just a window to a lot of really, really good investors here. Some of them short term. I see I've got Doug in the group here. I've got Jared Odell, which I'm very thankful for his time as well, making his way into the group here. And rendering some time to answering people's questions, opening up the forum. I get nothing but validation every single day for why it is we roll out and continually talk about this message. Very, very important. And I know there's folks that get involved with investing. They mean well and they get invested and they get kind of stuck in a habitual rut of thinking that they're doing the right thing. And sometimes those mistakes can really be self-consuming. They really can. You kind of get used to it. And until you have the opportunity to ask the scary questions of what type of advantage you're being provided by investing in whatever manner that you're investing in, lots of different, I'm not even talking the hedge funds. I'm talking about managed funds out there, and certainly introducing the prospects of investing on your own. So we open up the forum for folks to come in here and kind of throw your ideas in the group, ask some questions, get some validations. When you look at short-term validation, especially over a week that we've just had in the stock market, you're probably going to be sorely disappointed, okay? You're not going to be able to look at a portfolio after it's performed the way that it's probably performed over the last week. I thought we were kind of due for a pullback. Brent actually addresses that here in the conversation. I thought it was pretty healthy after, a pretty good run up first of the year. It was nice to see the market kind of come back a little bit. I didn't make any real moves this week. I did make some attempts to really put some diversification back into the portfolio. I hope that you guys are doing that. I think if the stock market volatility does end up coming back, it's going to be harder and harder to try to pick single stock winners out of the group. My winner for the week on the large cap side, and I know Doug will probably offer up a stock pick or two on the micro cap side of it. I always appreciate that. That's a lot of fun. Probably a lot more exciting than my stock picks that I roll out, but certainly the one that takes the cake this week was Costco. Really nice to see some green on the board with Costco, probably the '1 retailer right now. Own 15 shares of Costco, just kind of recently took that position a couple weeks ago, and really tried to spread out some dividend income. I look back over the portfolio over the last 2 years. The last 2 years has rendered about $7,500 of dividend income alone. That has nothing to do with the capital appreciation in the portfolio. All those things are analytics that if you just ask that question and you're kind of wondering, hey, I've got a $4,000 or $5,000 portfolio. What am I actually on track to make as far as my dividend portfolio? Those things are all right there at your fingertips if you're interested to go in and just set the drop down to look at what you're making in dividend income. I did look at it for the last 12 months, and it's surprisingly right at about $4,500. So just killer stuff. Thank you very much. I've got Ernesto in the group here, who's probably he's been with the channel since the very beginning. And I think Ernesto dropped in his portfolio into the Facebook group as well. And you guys need to understand that that is another resource to you guys. I want to make sure that the resources are available to you guys free of charge. Okay, that's really the way that it should be. Investing resources do not have to be, you shouldn't have to pay for this stuff. Okay, so much is readily available. And I think YouTube is just one of many investing resources out there that you can use. And I don't want you to overstate the importance of utilizing your brokerage for just that. And a lot of you guys are with M1 Finance. A lot of you guys have found your way over to First Trade. A lot of you guys have went with some of the major brokerages. You guys know I'm with Merrill Edge. Ernesto, thank you for that, man. I really appreciate it. I could probably do a personal financing session for that type of money, honestly, that of which I really do enjoy. And so I would open that up to you if you wanted to hit me up via email. And I can set aside some time this weekend to actually talk to you directly. But I thought the portfolio was really good. There's a ton of really good portfolio building going on in the group here. Just again, continue with the defensive mindset. And I really want you guys to understand there's so many people that are making their way to the channel. I just spoke with kind of a colleague today who's just finding their way to the message for the first time. And this individual, I'm trying to be very careful because I want to protect anonymity just in case this individual's making their way into the group this evening. New subscriber to the message today, but 20 years old. Okay. And there is a ton of 20-year-olds out there at 20, 30-year-olds that know that investing is the right way. They just do not know how. And they're trying to separate that black and white, or the gray matter into black and white, and really trying to understand what the do's and the don'ts are in the stock market. And we're always continually trying to strive toward answering those questions in a very simplistic manner. And you guys have to understand, I'm 41 years old. In retrospect, I can look back at what's worked, and I can look back at especially what hasn't worked in the stock market. So, for you guys that are kind of making your way into the group, I cannot stress enough how important it is that if you come across the message, and especially if you're referred to the message, how important it is for you to go back and review the Chronicle. I've got 275 videos online, and I don't offer those up to boost my views. I could care less about my subscriber count. What I care about is the integrity of the portfolios that you guys will build, and the separation of success on this channel is very simple. It's built by bringing somebody in who knows very little or nothing about the stock market and bridging that gap from very little knowledge to having a portfolio that they wouldn't have been able to build had they not had the information on the Independent Investor channel. And I know for a lot of folks out there, it can be misconstrued and be it can be very difficult for a new investor. It can be very overwhelming. Okay, and a lot of people want to just grasp at straws because they're trying to do the right thing. All right, and I just had a very invigorating conversation today about finances, and again, it does nothing but just validate my suspicion that there are way too many people out there who rely on everybody else rather than themselves. And whenever you're introducing somebody into your financial picture, and that's the beauty of this message, is that it looks at yourself first, always looking in the mirror first, because I know first and foremost that that's not going to cost you any money, okay? If you enter into a self-directed program, we're looking at eliminating and drastically reducing the fees that you would otherwise be exposed to if you went in and sought exposure to the stock market through either a managed situation, through mutual funds. Even if you bought a mutual fund through your self-directed account, right? There's work there to be done. Or you go in and you're sold mutual funds on the premise that that's going to give you some sort of strategic edge. I'm here to tell you that it does not. All right. Furthermore, if you do seek out your exposure through representation, just think for a second about the products that they're charged with selling you on. Okay. Typically, people will go in, and if they don't know a whole lot about the stock market, they'll hear terms like a mutual fund. And because they can relate to having heard of them and not having a real idea about the impact of the fees associated with mutual funds, they'll go ahead and opt into the mutual fund. And that's really, really unfortunate, because really the single greatest path to stock market wealth is with single stock ownership. Now, it doesn't mean that you have to build your entire portfolio around that exposure, because single stock is really risky. And then you've got bonds on top of that, and then you have speculative on top of that. But I really do contend that there's a happy balance of single stock exposure and your passive exposure. And if you didn't want to have anything to do with single stock ownership, you could scale it back to the very low, the lower level, and look at your sector spider ETFs. And that's what I've built the M1 portfolio on. I will try to roll that out to you guys, but very, very simple breakdown. I was very interested in getting M1 set the way that I think that it should be utilized, and that is through a passive program. So what I'm going to do is set that spider portfolio up, and I'm probably going to fund it with 25 bucks every couple weeks. Just get those injections of cash going in there and see how that spider portfolio performs over time as the dividends are paid. And that's a dividend reinvestment. That's basically kind of a portfolio reinvestment program in M1, which is a little bit different than a dividend income that's paid and bought right back into the single stock that you tell it to roll back into. But I asked a question at the top of the live stream, and getting you guys to really think of the strategic advantages that you have as a self-directed investor. And I want you guys to make sure that you're identifying those and that you can roll those off the top of your head from memory. Okay. It's very, very important that you understand that you've identified that if you own, for example, the VTI, my understanding is that Vanguard has taken the total market index ETFs, both VTI and VOO, and I understand that they're lowering their cost of entry from 0.04, for example, for their flagship ETFs from 0.04 to 0.03. You guys know they've done away with their investor shares. That's a big deal. They've lowered their cost entry to their Admiral shares to $3,000, which used to be the entry fee for the investor shares. Okay, that's my most popular video that I came out with on YouTube explaining this very thing. Okay, so just kind of understand where those cutting edge products are, and don't misconstrue the message, and that you can own Vanguard products in any brokerage account that you buy. Okay, I bought all 11 sectors within M1 Finance, and they're all Vanguard ETFs, every single one of them. Okay, so just give you an idea of the passive power of M1 Finance. And I really think that that's how you can strategically utilize M1 Finance to its maximum benefit. If you're one of those investors that want to put your money away and let it work for you day in and day out, there was something that Brent had said at the top of the show that I really want to reemphasize, and that's his ability to buy the market at a lot of different injection points during the year. Okay, now I've talked about this before, and I call it strategic buying. Okay, you've got dollar cost averaging, which is where you take a set amount of money and you inject it into your portfolio, let's say on the 1st and the 15th, or just the 15th. So you put it in there on a set day, no matter what, it funds the account and you're good to go, right? Strategic buying is a little bit different, where you would look at a week like this week and you may actually pick a couple days during this week to strategically fund the portfolio. Why? Because there was a couple of opportunities this week to do just that. Strategic buying. I typically do most, if not all of my buying, the heavier the red day is in the stock market, down 2, 3, 4, 500. If it's up over 500, I'm typically always taking that opportunity to buy. It's probably one of the biggest secrets that I can push through on the stock market, and it has nothing to do with timing the market. It just very simply has everything to do with paying attention, monitoring the stock market, not freaking out and being a baby when the stock market turns south. It's looking at it with a different lens and a different perspective and trying to take advantage of those dips a little bit. So I do want to call out, I just see that Dave popped in here from the Average Joe Investing. Thank you for the tweet on Twitter. I think that helped a ton. I did like it really quick. Good stuff. I've got Ryan T. Calhoun, picked up some lows this week. I picked up lows last week, so you got a better entry than I did. I really applaud that pick. I really like Home Depot as well. But from a valuation perspective, I actually like Lowe's better. I think Lowe's is a better buy. I just think Home Depot, I like their business better. I like their stores better. But I think both of them, obviously, they're the premier in the home improvement space, and I do own both of them. But great pickup. I think you did quite well there. So I just want to call out, we do have Average Joe Investing in the group here. And finally, I have Money Matters, who told me that they've actually started a new channel as well, stationed overseas. Thank you for your service, but certainly wanted to make sure and acknowledge that you are in the group as well. So thank you for your time. I do have Becky in the group, who's a longstanding supporter of the channel. Again, I do just want to, from the bottom of my heart, I kind of want to apologize, but I do need to shelf the Independent Investor channel. I do need to go on a hiatus for a couple of months here. I have an absolutely huge obligation that I need to focus on, and I cannot be deterred in my focus at work. I cannot do that. I do not do YouTube for a living. I will continue to do YouTube for the rest of my life. I say that with 100% certainty, because here's the thing. I honestly feel like we are making a difference. I really do. It's not, it doesn't have anything to do. I can feel all I want to feel, but I get a lot of validation coming back from the community talking about how much this message makes sense to them, how even investors in their 20s who haven't even started, investors in their 50s, 60s, and 70s who've come to the program and they're like, you know what, Ryan, you helped me see the center, really, to keep your investing perspective centered around your own capability. It's really, really important. And that's going to be part of the message tonight, is talking about some of those strategic things that you need to understand about self-directed investing that you don't have with the managed situations. I've already mentioned a couple, but you guys need to understand that the industry has taken this allure of money for a lot of people, and they have connected as many feelers within the money portfolio and packaged all of them up only to sell you on certain things. Okay. What I mean by that is dollar cost averaging is a perfect example. My old broker with Edward Jones used to do this to a T, and even I was naive to it. I didn't even understand it. And if you guys are hearing me out, and there's at least one person in the group who hears me out, I would highly encourage you to pull your financial disclosure from your financial institution. I don't care who it's with, pull it. And you're going to notice there that if you're contributing, let's say, for example, $100, in my case, they were taking 5.75% from that every single month. what made it even worse is those contributions would go in there. And for every mutual fund that you would have, they'd charge you 5 3/4, 5 3/4, 5 3/4. So the real takeaway is to identify, not beat yourself up, but really look at that and say, why am I paying it? I'm here to give you the why. The why is because in a self-directed, you set that up yourself. You're charged nothing for the rest of your life. That is a setting within your account that the industry has stepped in. And I don't know how many tens of millions of dollars they make on this stupid fee that they've taken, and they found a way to charge regular people. That's just one charge, just one example, okay? The other one that I talk about all the time, which is another flagship way that the industry has taken and attached fees to your right as a retirement account owner, is dividend reinvestment. They've taken the function of dividend reinvestment and they've found a way to attach a fee to that very functionality within your account. It's highway robbery, but it's politically accepted. And that's a lot of the reason why we came out with the channel, is to strike up a dialogue to say, number one, do I identify that fee? Am I one of those people that Ryan's talking about that's actually being subject to those fees? And do I have the courage enough to look at it, acknowledge it, and maybe look at an alternative out there? And until the Independent Investor channel came out, I don't think there was a lot of people talking about an alternative solution. And I still talk to people who still think investing on your own in the stock market is ludicrous. And I'm here to tell you that it's absolutely not. So welcome to the group. I'm super glad to have everybody in here. I really might try to go for an hour tonight. If you can't tell, my eyeballs are sinking into my head. I'm very tired. I woke up at 5:20 this morning to start my day, hit the road, drove 4 hours today with my job. It was felt well worth it. Had some killer road time discussion today. Really cool stuff with some of my colleagues that I work with. But certainly this is an awesome release to come on here and talk to you guys. There's nothing more I value on the Independent Investor channel than the subscribers, and especially the ones that spend some time to come in here on a Friday evening. This is y'all's time. And there's nothing more that I value for you than your time, okay? And that's the last thing I would ever do, is pop onto somebody's channel and look to waste my time, because every single one of us, our time is valuable. And I thank you for making your way into the channel tonight. I certainly want to open up the community to some discussion. That's really why we do this. If you guys have any questions, I know Ernesto has hit me up with some questions about some single stock offering. I was able to go back and look at my top 10 holdings within my portfolio. Pretty interesting. Put a sizable position on Vanguard's total index, the VTI. So that strategically was fit into my number 2 portfolio. And then I was able to strategically take some positions in not only the VNQ, which is the Spider ETF for real estate in my portfolio. I'm probably going to look to add to the Vanguard's utility sector Spider ETF. And guys, I'm sold on this. And if you guys tell me I'm off my rocker, please do so. I'd love nothing more than to somebody come in and say, you know what, Vanguard's not a good product. I have something better on the market, and here it is. I've found nothing that can compare with Vanguard, or at least there are a lot of products that can compare, but I just don't think there's a whole reason to justify going elsewhere. So been very, very impressed with those products. And outside of Costco being the stock of the pick this week, the stock pick of the week, which was really nice to see, I really want to emphasize for you guys, and I hope this hits home. I know we talk about the sexy ETFs and index funds, and especially the single stock. And I know Doug Whitaker always brings to the table something really, really interesting in regard to some of the more aggressive investments out there, opportunities, quite frankly. But I do want you guys to really, really understand and try to educate yourself up. If you don't have any bond exposure in your portfolio, I would highly encourage you guys to at least start on the education. If you have zero exposure to bonds, I've got 11% right now. 11% right now is good. I'm 20% cash. The rest of the 70% is invested across all sectors, overweight some, underweight some, but I'm pretty much very close to on the money with my aggressive allocation in my portfolio with my bond exposure. To be more specific, I've got a little bit in the long-term bonds, the majority of my holdings in intermediate bonds, and a pretty good amount of holdings in short-term exposure as well. So I really, really want you guys to look into the prospects of maybe introducing some bond exposure to the portfolio. They were all up today. Market was down this week. The bonds were all up this week, and they all paid me a dividend this week. All right. So it's just that counterbalance. Now, remember, this is only 10%, 11% of my portfolio, but it's really, really nice to see that counterbalance in the portfolio when you've got some volatility on the stock side. The idea is that these are working over here and churning away, while this stuff over here is not quite working for you, like this week was pretty bad. So I'm going to scroll through. If you guys have any questions for me, certainly that is why we do the live stream. I want to make sure that everybody's getting their questions answered in the group here. I've got Moy Lopez, VTI. Should it be in a Roth or an investment account? That's a really good question. You could really justify VTI in either location. If I had a preference to answer your question, always opt for the Roth. Now you're going to get diversified, slow growth exposure to the stock market within your Roth IRA. Here's the thing. The more risk that you introduce into the Roth IRA, the more risk of downside that you have. Now you're working very hard to get that Roth IRA funded up with tax deferred money, right? So you really want to kind of stay as close to the vest as you can, but still take that necessary exposure posture in your Roth IRA. You've got to kind of strike that balance. And where I see people go wrong in their Roth IRA is trying to seek out way too much growth exposure in an account that doesn't need to grow astronomically. Remember, you have time on your side in a Roth IRA. For you guys that are 20, 30, 40, and 50, you all have the time, 20s more so than the 30, 40, etc. You guys understand the exercise, right? But really, really make sure that you're trying to strike that balance. Remember, we're not trying to pick the perfect stock on the independent investor channel. And this is a myth that I seek to dispel across everybody who comes to investing and doesn't know a whole lot about investing. The first thing that they want to talk about with me is, what do you think of this stock? What do you think of this stock? I bought these 5 stocks. What do you think? I bought these 5 stocks. I'm thinking about these 5 stocks, to stock, to stock, to stock, to stock. And you're kind of missing the point a little bit in that, look at your program. How is your fitness? How is your mental fitness before you enter the stock market? How's your debt? Okay. Do you have any credit card debt built up? Do you have a cash reserve set up? Okay. I've got people on here from across the world that come into the independent investor channel community, and they look at us as Americans and they can't believe the level of debt that we carry. I couldn't agree more. I'm not one of them. We've got this idea, misconception in the US, that a debt to income ratio of about 20% is healthy. I think that's absurd. I think that's absolutely the most stupid thing I've ever heard of. My debt to income ratio is 2%. I could make it 0 tomorrow if I wanted to. And the fact that I even carry a 2% debt to income ratio, there's probably people that are, from Europe, Australia, New Zealand, Canada. I've got in the group as well, many, many foreign countries that don't look at and don't lean on credit the way that we do. All right. But my point is, how is your plan? How is your plan? Don't always look at the where to invest, which is going to be one of the next videos I come out with, where I talk about this actual product thing. All right, where I'm talking about a VTI like you talked about. VTI is built to where you can have 5,000, 50,000, or 500,000 in that one fund. So you don't really have to answer the question of what's that magic stock that's going to give me outperformance in the market. You don't have to do that, because there's a big, big difference between meeting the market, okay, meeting the 7 or 8%, 7 to 10% perhaps that the market is potential of returning, as opposed to taking on the level of risk necessary to seek out the alpha over and above the consistent matching of the market. What I mean by that is, a lot of people come to me and say, Ryan, I beat the market every year. Great. What's the degree of risk that you have to take on to seek that alpha out? And if you can beat the market, great. Statistics show most people do not. Okay? That's just a fact. I don't make this stuff up. I'm just here to share those statistics with you guys. So you listen and you sit back and you're like, Jesus, Ryan, that really makes sense. You know, I don't need to be trying to finagle with my portfolio, find that perfect mix of 10 stocks that's going to give me 14 to 15% outperformance, because I'm taking on an unacceptable level of risk within the portfolio. All I really need to do is take the safe passive route, get that tax protected, get it wealth preserved. Those two terms have very, very in-depth meanings for me within the self-directed account. I hope that helped answer your question. Mine VTI, my 50 shares of VTI right now, about a 7,000 position, is in one of the Roth IRA accounts. So hopefully that helped answer your question. Good stuff. I got Diego says, are you Irish? I have Irish in me for sure. That's really cool. You guys can ask any question you want. I don't really care. I'm very thick-skinned, but I actually enjoy questions like that. I do have some Irish in me. I guess I'm probably a mutt. I don't know. I'm kind of interested in doing that ancestry DNA thing, because I am really interested in my French, Canadian, Irish, German roots that I have. But kind of cool. Thanks for asking. I've got Hector Mendoza in the group. I'm also looking at Newell Brands at a 52-week low. Looks like a good buy at this moment. I don't have a comment on Newell Brands. I saw it really took a haircut. You just got to be kind of careful with trying to catch a falling knife. I really like their suite of products. I love the products Newell Brands represents, but I'd have to look at it. I'm going to defer on that before I give any type of opinion over the channel. Nexus here. How do you plan to withdraw your funds when retirement comes your way, and how soon do you think that will be? I really do have a target date of 59.5. That is harmonized with the retirement eligibility withdraw date. Now, will I start withdrawing funds at 59? I don't know. Probably not. To try to be as thorough as I can with that answer, being eligible for withdrawal doesn't mean that I just am going to go in and when I reach 59.5, I'm going to withdraw my, 1.5 million from the account. It's probably not going to roll that way. I'm probably going to look at the current condition of the stock market. And my goal eventually is to roll as much capital out of the stock market someday and start to build up some savings accounts that are FDIC insured up to $250,000 each. That should be anybody's goal, is to have hard cash, hard assets, whether it be silver or gold, so your precious metals exposure, and savings account FDIC insured up to $250,000. That's just my unique perspective. I think that there was a lot of people out there who were really, really hurt by the 2009, 2010 financial crisis brought upon by the subprime mortgage lending chaos, and a lot of people's portfolios were cut in half. That's terrible. I would never want to see somebody go through that if, in fact, they looked at their portfolio and said, you know what? I'm 45, 50, 60 years old. I've got $750,000 in the stock market. What's the problem with taking some white meat out of that portfolio and rolling it into an FDIC insured account? Just an idea, just a conversation starter to throw out there. But it really kind of just depends on where I'm at in the timing, where I'm at in my actual career that I have, what type of financial security that I have. So All I'm doing really right now is setting up a plan to provide me options in the future, but it's a very, very good question. I really appreciate that. More than hurt, people committed suicide. You're freaking right. You're freaking right. I really shouldn't beat around the bush. I'm trying to be as kind as I can to folks because I know there were folks that endured that. And I know it's easy for me to sit here and say in reflection, the right thing to do was hold. But God dang, imagine you were sitting on $800,000 and you wake up, you know, a couple months later and that account is now worth $375,000. That's a big haircut. So you just got to be kind of careful with you using the stock market for what it is. I just think that way too many people have way too much faith in the stock market. I have faith in the stock market to an extent that I need to have faith to justify the mathematical compounding effect over your money going forward. And I know that I can't seek that out anywhere else. Okay, real estate has its own ball of wax and its own set of rules when it comes to winning and succeeding in real estate. Stock is actually very, very easy. You can be a stock investor within a week. Okay, a couple touches of a button and boom, you're a stock owner. Okay, but very, very few people, I would contend, really, really can justify to themselves. They don't need to justify it to me, but justify why it is their current exposure is what it is to the stock market. And I don't care if it's foreign, emerging, domestic markets. I don't care what it is, small cap, mid cap, large. I don't care what it is. But if you're seeking your exposure to the stock market, guys, keep in mind, I'm looking to use, abuse, and get the hell out of the stock market someday. I'm not looking to marry the stock market. I have no emotional ties whatsoever to the stock market. None. None. It really has nothing to do with feeling. It has everything to do with taking ownership in the stock of a basket of companies that are trying to achieve profit. Okay? You share in the debt, you share in the profit, and hopefully over time, you're meeting accumulation enough to satisfy and justify why it is you seek that exposure in the stock market. Very, very important. I've got questions popping in here faster than I can get to. I may have to go a little bit longer than an hour tonight, so I may have to break that promise a little bit. Dollar cost average into a Roth IRA, and you will be good to go. Built up 10,000 as a base foundation, then go single stock. That's just one way to do it. That's really kind of one of the programs that I like. I like doing that. Get up to the first 10,000 just as an arbitrary rule of thumb. And then if you want to start to kind of set that up, because what I didn't talk about when I was answering the VTI question is the importance of setting those dividends up. I just told you guys I made 7,500 dividends, a little less than 5,000 over the last 12 months. That's free money. Now those dividend incomes are tax protected within the Roth, and they've all rolled back into contributing to building the portfolio up. So I'm just one example. I don't think I have a relative perspective about money, and I don't say that to say that 5,000 is a lot or a little bit of money. That's just what it is. Okay. I think the idea behind me sharing that with you guys is to understand that if you have a suite of stocks, which I've got a pretty heavy dividend portfolio with some mix of spider ETFs and some total market ETFs, I've got some limited partnerships outside the Roths, and I've got the fixed equities outside the Roth. I don't want to put that money to sleep within the Roth because, again, I'm trying to find that happy balance. And for me, owning a good value blue chip stock, even though sometimes along the line you trip and you stumble and you pick the wrong freaking one, Kraft Heinz food, General Electric, just a couple of bitches in the portfolio, no doubt about it. But I win a lot more than I lose, okay? And that's really the idea. Not a whole lot I could do with it. You roll. You live to fight another day. That's just what we do as an investor. You got to be tough skinned, man. You really do. I bought some Dow DuPont. It's freaking awesome. You probably are getting, I should buy when you buy because that's two stocks now that you've identified that you've got better entry points. Now I've owned Dow DuPont for well over a year now. And the breakup, I believe, is 3 companies. Hector offers April 1. I don't believe it's 2. I believe it's 3 very, very large companies. and I own a pretty good position. That's actually the only stock that I own in the materials sector. So that actually makes up the entire, I think I'm around 1.9% potentially of the portfolio in Dow DuPont. I'd have to check the numbers. I can check real quick for you guys. I've got it here. Stand by one. The materials, yes, 1.8%. So I just clicked over and took a quick look and saw where we are. So Ford, I think somebody else hit. It might have been you on Ford. I'm concerned about the unions. I'm not a big investor in autos. I'm really not. I mean, it starts. If I was going to invest in an automotive company right now, it'd be General Motors, just on a valuation perspective. I do like Ford. I like the product. I don't like the union cancer that is attached to Ford stock when you buy it. I don't care how big of a dividend that they can pay me. But if the Ford stock hasn't been able to do good over the last couple years, I'm not sure where you expect Ford to go going forward. Now, I may be giving you a jaded perspective on Ford because, again, it's not one of those stocks that I'm interested in. It's part of a subsector that I'm just not really interested in. I don't typically invest in autos. I've never owned Tesla, which I feel like is the bottom of the barrel, quite frankly. Daimler Chrysler I've looked at from a valuation perspective. That's a really interesting one. So Daimler Chrysler, I would look at the division that owns Detroit Diesel as well, because those engines are going into the freight liners. I may have some visitors from Germany, certainly. But those Detroit Diesels are going in the freight liners. Daimler Chrysler owns Detroit Diesel. You guys can do the research on your own and check it out for yourself. But that would be a place that I would look. As far as what everybody wants to talk about, and Tesla and Ford and this and that, I wouldn't touch it. I would touch 100 other stocks before I would go with that route. So really good stuff. I'm going long on Nokia. I actually own a small position in Nokia. I own the Nokia position in the first trade account. So I'm kind of strategically buying that small stock portfolio up to really try to get and prove to you guys that you can start an account. I started that account with $1,500. Same thing with the M1 account. It's grown now. I've grown that account to around 3,400. We're down a couple $100 this week in it. But I set it up to be a dividend income payer. I've got some really cool regionals in there. I've got some good oil exposure, KMI, Marathon Oil. You guys know I've got Sanofi in there. I've got Regions Financial. I've got, there's a really good materials holding. The name escapes me. I've got the French Telecom in there, BCE, excuse me. Yes, I've got BCE in that account, which is Canadian Telecom. And then I've got Oran, which is the French Telecom. I've got a French healthcare company in there. I wish I could remember the ticker symbol. I don't have it with me, and I can't remember it off the top of my head. But yeah, I think Nokia is really good for 5G. I really do. Don't get misconstrued. If you were going for a value play, I'd rather see you go with Comcast in the same sector. In communication services, I think Comcast on a valuation at 15 times looks attractive here. Get a 2.5% dividend to boot. But I do like Nokia. I own it. I don't own Comcast. So really good. I can't ask for a better group. I'm really energized by the amount of activity in the live stream. I know I've had a lot of new subscribers to the channel. I'm a little bit of an anomaly on YouTube, okay? So for you guys that are coming to the live stream, if you're reviewing this after the fact, don't expect daily uploads from me. Ain't gonna happen. No way. Not gonna do it. I'm trying to provide value, and I always try to offer this content from the perspective of, if I'm on the receiving end of it, what is it that I can say that I need to hear, okay? And that is an ability that will, in time, prove to you the value of the channel, okay? I don't need to make 1,000 videos on the financial topic. I guarantee if you go back and review even half of the chronicle of videos that I've put online, you'll have every bit of knowledge and tools that you'll need to go out there and succeed on your own if you truly are interested in doing just that, okay? I have not made this to where it's rocket science and you have to have some financial degree to do it. It's not like that, okay? The access to the stock market is open and accessible to anybody. I just feel like so many people put their attention on all the wrong stuff. And just because I'm not a small channel on YouTube doesn't mean that there's not value, because I'm here to tell you, again, if you're first to the channel, there's value, okay? Sorry to tell you, but that's just the way it is. And the value exists in each and every one of the folks in the community who are taking up self-directed investing, looking in the mirror and saying, you know what? I get it. This freaking makes sense, all right? This is what we're going to do, and we're going to do it off of principle. Then we're going to start to validate why it is we do what we do. Good stuff. Sold my position in T with this new acquisition, loving collecting that dividend, but too much noise and debt for my liking at this moment. I still own AT&T, but I actually agree with you on your comments about AT&T. It's kind of frustrating. They can't even get out of their own damn way, to be honest with you. I've got Sam Ike in here. As you guys have cruised down, I've watched almost all of your videos, and honestly, you're one who made me feel comfortable to finally get into the market after about a year of learning and watching videos. Okay, so I want to comment on that. That's the whole idea. The last freaking thing I want for you guys, and I'm not an ego freaking maniac, which is what I see all the time on YouTube. Not going to name names, but here's the thing. Sam just made a comment that he came on, reviewed the catalog of videos, and he made it make sense for himself. All right. I assume it's a him. I've made that error before in assuming, but I should be more gender neutral. I do apologize for that. But I do assume that he's went back, reviewed the catalog, made sense for himself, and doesn't go out and say, I've got this guy on YouTube who taught me everything I need to know about investing, and I invest exactly like him. That you're missing the freaking point if that's what you're trying to do, okay? The idea is to listen to what I do as a testimonial, because I'm about as freaking open and honest about what it is that I do. There's no secret squirrel club BS backdoor that you have to charge to come on and look at my badass portfolio. It's badass. It is. And here's why it's impressive. It's because I have built that portfolio up on a blue collar salary, okay? I just started making over and above the average income in the US, okay? So there's a ton of people who can resonate with the message. Maybe they make a little bit more money than me. Maybe they make a little bit less. But a lot of people will look at it and say, God dang, I can relate to this guy because he's a hardworking freaking guy. He's not trying to come onto YouTube and make $50,000 a month by selling things that people don't need to be sold on. Why? Because they're free of charge. They are readily available out there. Now, my unique advice, I give that little bit of cutting edge to folks because I want people to understand the power of potential. They have to understand the power of potential. And the degree of me selling my first car, splitting the $3,000, $1,500 in each account, and each of those accounts are now approaching six figures each is impressive. It's impressive, okay? I have not manufactured that wealth. I have built that wealth. Again, I will repeat, I have not manufactured the wealth. I have built the wealth, okay? So for folks that are watching and coming into the channel and they're thinking, wow, Jesus, man, I can't start a YouTube channel. I can't just get on and put a $250,000 portfolio online and tell people that I'm an incredible investor. What people can do is come to the Independent Investor channel and understand that if this guy did it, you can do it too. You can. Because that story that I just told you about the starting amount and $1,500 on a $25 dollar cost average, I'm sorry, but if you're out there and you're thinking to yourself, I will never, ever be able to do that, I'll tell you, you won't, okay? But I know there's a ton of folks out there that actually have the ability and say, you know what, I've got more than this guy. What the hell is my problem? You know, I need to kick my own ass in gear and get going on this thing because time's ticking, you know? And the quicker you can realize, and it's the most hard for the old dogs that are involved with old tricks. Those are the hardest ones to get to. And those are typically the ones that they think because they make money, they have the opportunity to offer an opinion, as sidetracked as it may be. Those are typically the hardest ones to break through. They're like blockheads. I can't get through to those people. But for folks that are open-minded, 20, 50, 60, I don't care what your age is. I care about your mental aptitude and mental openness to a new idea. I am. And I feel like I've got this thing pretty dialed in. But this is why I come into this channel every single Friday, because I'm looking to bounce new and good ideas off of folks that come in here and rock it out on a financial discussion. It's just awesome. Quick notes, media's in the group, just kind of popped in here. It's Mimi. I appreciate your wisdom knowledge. One of my favorite people in the whole world. Very cool stuff. I'm very happy with my investment opportunity. So it's really cool, and I will comment on that. The key, and I think Mimi has kind of kicked a little bit of an interesting perk in me, in that identifying the importance of the person's needs and the solution that works is the key, okay? You can't come on to YouTube and you can't look at me and say, that's the solution that's going to work for me. If it works for Ryan, it's going to work for me. It just doesn't work that way. Okay, we provide plenty of questions to be asked over here to understand what it is that you can expect to seek out in way of products. But you have to answer a few questions about yourself, about your risk tolerance, your goals, etc. What type of investor do you want to be? I've had people come to the channel and be like, I'm not interested in single stock. Wonderful. Let's provide that suite of solutions out there that exist on the marketplace, and finding that secret sauce, matching what it is that a person has in their needs with regard to what program they want to deploy for themselves and what product is going to best fit that need. And that's really the key when we're trying to find solutions for folks. That's why I say all the time, for the folks that have been with the channel all the time, they've heard me say many, many times, there's no one particular solution or portfolio that needs to be the same for any one given person. But there are certain themes that you really need to look for and make sure that are existent in your guys's program and plan, because I can tell you a lot of people give away the freaking farm. They do. It's crazy. And the problem with it is, I would be almost okay if you were giving away the farm and you could know or acknowledge that you were giving away the farm. But most people have no idea. They have no idea. They think that because they're paying somebody exuberant fees, that they're providing them a strategic edge. And I'm here to tell you that they're not. We've been going about 52 minutes. Thank you so much. I hope the palm trees are treating you good down there. I can tell you what, it's cold as heck. I've been having to run outside in the cold weather, man, but it's really good to see you kick in. And I know that solution's working good for you, because I know you're a working professional and I know you don't have the time. And I don't want to overstate the time necessary to be a self-directed investor. But the level of success that you'll find in self-directing will be kind of related to the amount of time that you want to spend, especially if you're interested in single stock ownership. You want to get into passive investing, it requires zero time and effort, zero. You can buy the total market index, plug it away in a self-directed account, free of fees, tax protected, wealth preserved, and let it ride into the sunset. Very, very simple. It's an autopilot program. It requires no investing knowledge. That would be something to where if you knew nothing about the stock market and you were interested and you came onto the self-directed investor or the independent investor channel and you were like, what are the top 3 steps that I could take? Start the self-directed account, buy the S&P 500 or the total stock market ETF, VOO or VTI. Look them up yourself. You'll see what I mean. Expense ratios of 0.03 now from Vanguard. Set them. Don't mess with them. Set them up on a dollar cost averaging schedule. Set them up to dividend reinvest when those dividends are paid to you quarterly. If you just heard what I just said in less than 1 minute, you could be a winner in the market. And so many people look to overcomplicate it. They really, really do. So we've got a killer group. Bob Wright throws QQQ. I've owned QQQ before. It's a really, really good offering. It really is. I tend to own a lot of those stocks individually on the NASDAQ, the large capitalization tech stocks. If you guys don't know, that's what the triple Qs are. It's good. And you can seek out your exposure that way as well. If you don't want to buy Intel, Apple, Microsoft, all the big dogs all at the same time, Amazon, Google, Facebook, right? If you don't want to own those all, you can buy the triple Qs and just get your exposure to the top market cap in the NASDAQ, the top 100 technology stocks. That's what that represents. And I think it's power shares, I believe, if I'm not mistaken. I spend the majority of my time just looking at Vanguard products. And I've owned the QQQ. I've owned the DIA before, which is the Dow Jones Industrial Average. It just covers the 32 stocks in the Dow Jones Industrial, or the 30, 31, whatever the hell it is. But it just covers those 30. So if you didn't want to buy Home Depot, Coke, McDonald's, Apple Computer, etc., all the Dow components, Travelers Insurance, if you didn't want to do that, you could do that. Buy these dips. He didn't just offer one stock pick. He offered like 20. That's pretty awesome. Doug, thank you, man. Very cool stuff. I will save that listing of ticker symbols. That's pretty cool. I'd like to make a quick buck this week, whatever. But I'm not going to have a whole lot of time, I think, in looking at the market. I'm putting my portfolio on a plane. It's built the way I want. I've got, again, some over allocation, some under allocation, but I'm satisfied. We've got a killer portfolio to take whatever the stock market has to deliver over the next few months. And again, I need this leave, so I'm going to be taking it. And I would expect when I come back to re-energize the conversation. I know a lot of you guys feel like you're part of the family anyway, which you are. You have no reason to think otherwise. But when I want to walk from the channel, that's exactly what I do. I do it with some hesitation because I really do feel connected and committed to the project. I really do. But then again, I also look at the 275 pieces of content that I've put online, that of which each have its own unique perspective, its own unique takeaway, its own unique piece of value. And I know some of you guys have hit me up and said, I've watched them all. And that means the world. It's awesome. As long as you've got value out of it, I'm all about it. So SPYG has been doing me good here. That's awesome. Thank you, Jeff. I got Jeff Koski in the line offering it up there. I invest in individual dividend stocks. The OC, that's the way I do it. But I do add some passive, again, some spiders and some total market stuff. And again, with my retirement, my employee sponsored as well, that's in place, got about 25,000 bucks there. That's kind of gives me a little bit more freedom and flexibility to be a little bit more aggressive on the dividend side of it. So really, really good stuff. Andrew Trapman, trading, investing, he's kicking in the group here. Real cool to see that. I am going to scroll up and make sure. I know there was a ton of them that just popped in here. I got Daniel Martinez. Hello, this is my 4th year that max out my traditional IRA with Mainstay because my recommended it has his money there, but I think in investing myself in a Roth IRA, 28,000. A traditional can be very beneficial, lower the taxable income. Certainly, this gets into the golden question. I typically try to simplify this answer to folks in looking at the Roth IRA. I just love the perspective of putting hard-earned dollars away, paying the tax upfront on that $1 for the potential that $1 can multiply and turn into multiple dollars down the line, and I can remove those dollars from the account once the eligibility date kicks in, 59.5. I like the fact that I don't have the required minimum required distributions, RMD, that you do in a traditional account. So just a couple things there. I'm guaranteeing, I don't know what the government's going to do. Hell, I don't know what the government's going to do next week, let alone when I'm 59.5. and looking to withdraw my money, but at least I would love to have some leverage in knowing that the tax brackets are capped at 0 later on in life. That's one of my really big explanations as to why I kind of defer to try to look at the Roth. But when you actually run the numbers, a traditional IRA can actually be more beneficial than a Roth in certain circumstances, and it comes down to the income that you're making and the amount of reduction that you can taste to reduce to your taxable income, and especially what you do with that tax savings. If you just save on that tax and you go blow it on something else, then that's probably going to blow that equation out of the water. But for the folks that actually take, let's say, the traditional benefit up front, and they look to backdoor those savings as well, there's a sweet spot, and a tax accountant can help you. It's perfectly legal. Take the traditional benefit up front, reduce your taxable income for a few years, get it up to a point, then take the withdrawal, pay the penalty, roll that into a backdoor Roth, into the Roth IRA, and then take the benefit on the back end of your life. So kind of cool stuff. It's some discussions that are really, really good that we've got going on over in the Facebook group. So just clicked over an hour. I am going to cruise up here and make sure that I've got these. I've got Robert Lapointe, very, very astute follower of the channel. Excuse me for pointing out that Daimler Chrysler is no longer a thing. Thank you for doing that. I just looked at Daimler Chrysler. I may have just been misspeaking. I don't know who, at the time I was looking at it, it was Detroit Diesel that owned, Daimler owned Detroit Diesel. So thank you for pointing that out. It's been just here recently I looked at it. It may have fallen under a different name, but it was the ticker symbol that I was looking at. But thank you for that. I appreciate it. Thoughts on Pfizer? I own it. It's a good stock. Healthcare has been really kind of out of favor over the last couple of weeks. I own Johnson & Johnson, Pfizer, Medtronic. I own the sector Spider Healthcare ETF from Vanguard. So those are 4, just to give you an idea, some excerpts from the portfolio. I want to say that I own a couple more out of the healthcare. I do. Novartis, I own. I thought there was one additional. I'm not really sure what's wrong with CVS. If you guys know, I'd be interested, but I don't know why that's fallen from grace. Just had some price targets cut on CVS, but man, I was thinking about buying that in the 60s and I didn't. I'm really glad because it's really fallen from grace. I really like the business, but something's wrong there. Office Depot, I just partnered with Alibaba for more online exposure. Picked up a starter 100 share lot in Office Depot. Interesting. Office Depot has got some really good reviews on it. I'll actually look at that. That's really, really good discussion. Thank you. Jerry Welch offered that in the group here as well. Diego, USA is a Canada goose country now. This is how we roll here. That's awesome, man. Ditto for me. No worries. We don't have time. Watch for hours and hours. What you do is great. Very cool. Mimi, thank you so much, man. I really appreciate that. I tell you what, I sure wish I could. I'd like to get down there and catch one of those polo matches, man, these days. So, I really appreciate that. That's really cool. Thank you so much for that. Appreciate the support. And I'm glad everything's working out. I know it will. That's a really, really cool program that you're part of. And I really, really thank you for everything. The sky's the limit for you. You're going to kill it. That's really one of the cool things about this community is that I've met so many people that an introvert like me would have never, ever had the opportunity to meet. You would never, ever, I mean, when I'm walking the street, you would never, ever stop and say hi. And I'd never have the opportunity to meet so many kind people that I've met through this opportunity. That's some real talk right there. And that's really where a lot of the value is. So thank you so much for that support. Awesome stuff. I'm going to miss the channel. I'll be hungry to get back in a couple months. We're going to let this winter kind of sift out. We're going to get into the springtime. And come the springtime, I'm not going to be so devoted to, I'll have a couple things accomplished with my profession, which I have to do. I just don't have a choice. And this is going to be the release that I have to take. I cannot feel like I've left anything on the table. Certainly, I would expect that the channel continues to grow. I don't feel like I get any love at all on YouTube whatsoever. I get most of the support from the community who take the message and they share it with folks. I'm going to come out with a couple videos that really could kind of hit home for people if they did want to take and share the message. But I really, really appreciate the support, man. Awesome stuff. I've watched almost, yep, good stuff. Very good North Face jacket. I'm very famous in Dublin. Yeah, North Face has always been one of my favorites, actually. I get kind of a cool deal being affiliated with my work with North Face, but I think the quality's kind of fallen off a little bit. I'm a little disappointed. I've picked up some of my stuff in the past when they really used to kill it on the quality. Just some awesome stuff, but thanks for noticing, man. I appreciate it. I'm from Oregon, man. North Face was founded in Berkeley, outside of San Francisco, from what I understand, if I understand it correctly, but it's good stuff. I like it. What do you think of Chinese tech sector? Any index fund that you'd, I don't know. That would be really an interesting thing to find out. I do seek out my Chinese exposure through single stock. I sold Alibaba. I've had Alibaba and Baidu on a channeling schedule. I've channeled those stocks probably a half a dozen each time, and I've probably milked $1,000 out of each one of them, just channeling those two idiotic names over the last 3-4 weeks. And I just sold Alibaba, Baidu at the right time. They dropped pretty good today. They did come back a little bit as well as with the broader market, but I still retain my holdings in China Mobile. I retain my holding in JD.com, which is my largest Chinese holding right now. But I may rebuy come Monday. I may rebuy Baidu and Alibaba based on valuation, to be honest with you. They've come off of their, I mean, Alibaba just a couple months ago was at 130. Baidu still is kind of close to a 52-week low, a little bit closer. I'm a little more comfortable with that. But I've just been on a channeling tear. You guys understand what I mean by channeling. I'll buy and sell a stock multiple times. If I can siphon off $150, $200 profit every time, I'll do that. I'll sell it, wait till it goes back down. If it continues up, who cares? I let it go. But Baidu and Alibaba, for some reason, I've just been on a winning streak with those, channeling them. Having some fun, making some manufactured money in the portfolio. Don't get into a habit of doing that like me. Just some real talk. That's what I've done with those two offerings. I'm just being real. That's just what I've done. And then I thought I had one more Chinese offering to tell you about, but I currently own China Mobile and JD.com. I thought there was one more there as part of the group, but I guess not. But anyway, new to the channel and just got home from work. Thanks for all the info that you put out in your videos. I got Jeff Koski there. You're totally welcome. I just want to make sure if you have any clarity questions, that's really why I offer this. Once a week is a pretty frequent opportunity to come on. And then, of course, we have the Facebook group that's open 24/7. And there's so many people there, man, that are just, I mean, you can devote to charity. You can volunteer your time. I know there's people that go into that Facebook group and they take it as a personal responsibility to help each and every person. There's multiple responses. If you throw your idea, there's no stupid question. Really, as an investor, everybody's learning. Everybody's involving. I'm not exempt from that. So I've learned a ton from that Facebook group. And I encourage you guys to go in there. Take a look at some of the solutions I've dropped on the Facebook group, obviously, but I think you could benefit from some of the back and forth. The admins that I've designated as admins, you know, Ernest and Raymond and Jared, all those guys, they're smarter than me. We all just bring a different perspective to the table, and I think our power as a community is far greater than if I set this independent investor thing up like a dictatorship and I'm the boss and you do what I say and that's the way of it. I just don't believe in that crap. I don't. I just don't think there's nobody out there in the investing landscape who has all the answers. Nobody. It doesn't exist. Sorry to tell you, that's just some truth talk right there. And I think a lot of you guys understand that. I think, you know, you're never, ever immune to a mistake. In the stock market, there's certain things you can do to help defensive position yourself against volatility, downturn, etc. diversification, dollar cost averaging, things of that nature that you always want to control in your portfolio. But yeah, it's a good opportunity to kick some of those ideas into the group. But I think we're doing good in offering those opportunities to folks if they're willing to take them. And Jeff, that's an awesome comment. I really appreciate the vote of confidence, man. Randy, what do you think of KHC? I'm down 34%. I would hold KHC at this point. I don't know what the total overall is in that portfolio. Single stock, I really typically recommend. I told you guys, I think I put in the group that my number 1 holding, my number 2 holding in relation to the total overall portfolio is Facebook, and I own 3.9%. That's it. So if I took a real bath in any one of the names, I think KHC right now is like 0.5% of the portfolio. I would hold. Okay, you don't want to sell when this stuff is going on right here. Certainly hold it. I know the one that just spun off of Mondelez 8-9 years ago, which was Mondelez, is doing quite well. But really unfortunate. There's just nothing that a shareholder could have seen, could have done to avoid that type of wreckage. And there's just no excuse for it. That's some of the risk that's involved in single stock. And that's where a lot of people eventually, if you do single stock investing, eventually you're going to come across and you're going to pick a lemon. Okay. The idea behind that is not to fear picking a lemon. And if you end up doing it, you always have the option to wait through, but also learn from the experience. Okay. I know this is not what you want to hear, but this is what you need to hear about asking the question, was I over levered to the stock? You know, did I own too much of it? Did I have a nice diversified base to where I can keep this company into the future and hopefully they can straighten out? You know, when I start to hear problems, it's not about the products with Kraft, okay? It's about mismanagement. And when I start to hear things like that, where it's mismanagement and misaccounting, it just makes me cringe. I have no idea how idiots can be put in charge of a company at the expense of shareholders. And that's kind of what happened with KHC. So I would continue to hold it. Don't make any rash decisions in the short term on your holdings in Kraft. Don't do that. It's the same idea with General Electric as well. But again, single stock ownership, if you can't handle the swings in single stock ownership, there are other layers that are available to where you just buy the market and you buy the diversification right up front. So hopefully that helped you with that question. I've been looking into foreign stocks. I found an airline that might be worth looking into, AVH. Thank you, Jerry, for offering that. Good stuff. Some insight in UNH. One of my favorite healthcare companies, UNH, and I've never owned it. I don't know why. I like Travelers, but as far as healthcare or insurers right here, you guys know I own Prudential and MetLife. And Berkshire Hathaway is always a good pickup if that's what you want to do. I just don't really like the fact that Berkshire doesn't pay a dividend, you know, but, you know, I don't think you could go wrong with your position in Berkshire. I think you could pick it up. I think you could do quite well. I'm a dividend investor. Listen, guys, we've been going 1 hour and 12. I really think the quality of this live stream has just been awesome. I am going to scroll up through here, but I'm probably not going to go much over 1:20 for this evening. I know some of you guys are kind of starting to sign off. I think just as a favor, I think I'd like to keep this a little bit shorter this evening. To me, again, very tired this evening. Very long week for me. Again, in preparation over this weekend to start to ramp up on this project that I've got going on. Please expect that the frequency of the uploads are going to come to a screeching dull roar. I'm going to be crawling into my creative hole for the next 2 months on this project that I have to get done for my work. So my commitment to you guys doesn't change. It just means that my upload frequency is going to take a pause. And again, I will apologize up front for that, but would just ask that you remain loyal to the channel. Don't unsubscribe. I really don't want to start over from zero again. That would be kind of unfortunate because it took me 2.5 years to build up the subscriber base that I got. And there's every one of you guys is very important. You got to stay with the message and continue to evolve and build over time. Do you know your average dividend yield across all of your accounts? That's good. I don't know. I would suspect that the yield across all the accounts, if I just had to take a wild guess, is probably just a little over 2. But I don't know because that's not a primary focus. I do have some growth in the portfolio. Obviously, that pulls the average down, etc. But if I were to take it and just do the dividends, I would say that it's probably closer to 2.5. If I were to take and average it across the entire portfolio, it's probably closer to 2 because some of those fixed income products, they don't pay over 2%. They'll pay the div of 2.5% in some of those funds, sometimes less than 2 basis points there. But that's a really good question. I don't know. I could probably just as a research project go on here and find it. But that's a good question. It's a heck of a good question. I would say 2 to 2.5 probably is the dividend yield on the portfolio. Dollar cost average into a Roth IRA and we'll be okay. I already got to that question. So again, guys, just cruising up here. I've got chronology. What do you think about dollar cost averaging single stocks versus dollar cost averaging on a Roth or mutual fund? For example, DCA through lows and ups in the economy with a good company like J&J. So that, in essence, is a very good question. So shing-a-ding-a-thing-a-fling, a flop, a flip, a flu. I think I got that right. That was pretty freaking awesome. You can buy single stocks in an IRA. That is true. And you guys need to understand as well with the M1 finance option, that's portfolio dividend reinvesting. So a little bit different. When those dividends are paid, they go to fund the portfolio as a total pie. Whereas a brokerage like any of the ones, a traditional broker, if J&J, for example, pays the dividend, it just rolls right back into the shares of the stock. But yeah, I hope that kind of answers your question. That's the way I have my portfolio set up, is that all of the names are set up to pay capital gains and dividends and roll those back into the stock. You'll see that some of my longer holdings have those partial shares, and the idea is that those build upon themselves quarter after quarter after quarter. So thoughts on your 2019 #1 growth stock CRM? I'm all about it. Dropped quite a bit this week. Looks tempting. Well, Jesus, it sure, as a growth stock, CRM is a very high multiple stock. If they're not performing at perfect level, which they are, straight up, just blew out the quarter again, didn't like some of the forecasts, so it dropped back, I would take advantage of this buying opportunity in CRM Salesforce. It's my favorite growth stock that I own in my portfolio. Just giving you kind of some insight of my thoughts. I didn't add any to it, but I watched Salesforce over the volatility October, November, December of last year go all the way down to 130, and nobody was asking that question. So here at 155 is not necessarily a bargain, okay? I think it trades at 80 times forward. So very high multiple stock. So with the risk comes the reward. I think long-term Salesforce kills it. I really do. I'm very, very high on Salesforce and Adobe. I own them both. I'm very interested in the cloud. I own Microsoft. I sold out of IBM, but my cloud exposure with Microsoft, CRM, Adobe, but very high. But CRM is one of my favorites, really. I wouldn't sit too long because you're just not given very many opportunities with CRM. You saw that it sold off after hours. It was down $10 a share, down to 150. The next day it opened, it was back up to 155. Crept all the way back up to where it didn't miss a beat, 158. And today it just adjusted back to 155. So just be kind of careful trying to pick the perfect entry on CRM. Relative to your total all portfolio exposure, make sure that you're not overexposing to a name like, say, or Salesforce. The last thing I want to have you do is go put 25% of your portfolio on CRM with the idea that you're going to get rich off of it. Okay, that's not the idea behind seeking some technology growth exposure, cloud play in one of the finest companies, if not the best company out there, which is CRM. So guys, we're approaching minute 20. I really want to kick up here. Out of curiosity, what made you pick Friday for the live stream? I kind of put some feelers out there with the survey. I try not to survey the community to death. I think it's annoying as hell. But when I do want to know an answer, I do put those surveys out there. And Sunday actually was one of those that kind of came up in the discussion. I really don't know. It seemed convenient for me. Nice nightcap and a Friday evening. I've got the kids in bed right now. So it's kind of convenient to me, but no real particular answer. And I know for the folks that are around the world, I know they just catch it after the fact. And for that support, I really do appreciate it. Kind of want to make sure got some of these. I rolled over my IRA. It was in cash today as I didn't allocate it in the new IRA. Cha-ching. I'll be buying back in with more shares. Good stuff, man. Good, really good timing on that rollover. Really good job. Thoughts on United? It's a buy. I mean, United, you're not going to go wrong with United Health, UNH. Very good stuff. Did Ancestry have 5% native blood? That's 5% more than Elizabeth Warren. Nice. I got Alan Kane here pushing a little fun in the political stage. Good stuff, man. How do you plan to draw? Okay, good. Guys, I think I got to most of the questions this evening. Average American can't afford to fork up $1,000. Would have to finance almost everything scary. I think everyone in this group is in better standings. You know, I kind of agree with that. I do. I think I don't come from money. So when I look at $1,000, I think $1,000 is a lot of money. I do. Where I come from, $1,000 is a lot. I understand the power. I respect the power of $1,000. You guys have no idea how many fish I used to catch on the ocean to make $1,000. Do you know how many tons of sardines that is? I should probably do the math and tell you. You guys would be astounded and understand how much I think $1,000 is. But here's the thing. I don't typically like to talk in those terms. I like to say, look, if you could start one of our accounts, M1 Finance has a minimum entry to start the Roth IRA of $500, okay? $500 to start the account, boom, you fund it up, get some ETFs, pick one of their model portfolios, build the portfolio yourself, whatever suits your fancy. First Trade has no minimum to entry, none, okay? So you could start that account with really as little or as none as you want. Now, I do contend that there's some value in identifying a starting amount, because if you're serious about stock market investing, it'll just take you a little time. If you start from 0, go to 25, 25, 25, and start to dollar cost average it up with just $25. I always like to see people prove to themselves that they can save up a little starting capital. Furthermore, goes into my philosophy of trying to save a little cash buffer to the side. So for example, if you're making $1,500 a month, hell, I've been there. I've been there, done that. Okay. So I don't have any reservation at all about telling you guys that I mean, I used to do janitorial work and I've done it all. I have plenty of humility. I don't have pride enough to tell folks that, you know, maybe doing some of that work to say, to judge you or think about, if you're making $1,500 a month, then okay. The secret is to look at that $1,500 and how can we maximize? Is there $25 that we can parlay out of that budget? Hell, start with 10. Get aggressive on this program. Don't look at that $1,500 and say, Ryan, it's easy for you to say. No, it's not right to think that way. It's perfect to say, you know what, I make that 15. I'm going to start. I don't care how little it is. I'm going to start this program because we provide the solutions for you to start doing that. And eventually in your life, I'm hoping that that $1,500 turns into $1,650 and $1,800. And maybe you get a raise, $2,000. Maybe you get a different job. Maybe you start making a little bit more. Maybe you make a little side hustle at home. And the work that you did when you started that account, when you didn't think that you could, that's going to make all the difference in the long run. And who's to say that you don't have to make millions of dollars in that account. Make what's appropriate for you. And if you end up retiring somewhere down the line at 60 years old and you've got an extra 100 grand in that account, why? Because you made the decision to start. And that is where a lot of people falter. They do not have the courage to even start. They look at it and say, I don't have $1,000 to start. I'm not starting. And they don't think about it in a perspective that I offer. That's how I started, right? Start the account with as little as you can, but the idea is to get over those mental barriers of paying yourself first to get yourself started. Guys, thank you for tuning into the YouTube channel tonight, man. It was so cool. Really killer live stream. Thank you for all the support of the channel. I don't know if you guys hit an extra decimal in that tip, but that was the greatest tip I could have ever want. And I'm seeing double. I don't know if it's because I'm tired or if Mimi had a good week at work. I'm not really sure, but I thank you so much. That really goes to support the channel and support the effort that we're putting through and empowering individuals, man. So I really support you guys. If you haven't hit the thumbs up button, please do so now. Help us support it. I'm going to sign off now and let some of these guys review this within a minute and a half that catch it later on. Again, try to keep me up to speed on everything through the Facebook group, and we will reconvene. I'll try to get some uploads up the best I can, but I'm really going to expect to take a break over the channel over the next couple months. So thank you for all your longstanding support. You guys keep it real. Keep your stick on the ice, man. Stay defensive, stay invested, and we'll reconvene a couple months from now on the Independent Investor channel. Thank you again for all your support, and I will catch you guys on the flip side. Thank you so much. Have a great rest of your weekend.